Good morning, ladies and gentlemen, and welcome to the show this Monday, the 13th of September, 2021. Glad to have you guys here. We're going to get right into the charts this morning. Let's open up the charts right here and take a look at what's going on. The Congress and lawmakers are returning to Washington, and they got some major issues. One of the major issues they're going to have to try to get through is a debt ceiling. They got deadlines to meet here, and economic plans to fund the government and raise the debt ceiling, and they got several critical deadlines. But the debt ceiling, they've been putting this thing off, Uh, the economic agenda of this infrastructure plan too, this infrastructure bill, the $3.5 trillion infrastructure bill, which I think is probably going to get knocked down to less than $1 trillion. That's what I think is going to end up happening to it. It says American people are facing challenges of monumental proportions, so we must pass legislation that meets the moment, Senate Majority Leader Chuck Schumer said, pushing for the torrent of new investment and social programs. And so the $3.5 trillion plan, it says Pelosi hopes to approve an up to $3.5 trillion plan and invest in social programs, climate policy, in conjunction with an infrastructure bill. But the House, Senate, and White House are still writing the plan and deciding which version could win the support of the nearly every Democrat in the Congress. Debt ceiling. The United States could default on its obligations in October if Congress fails to raise the debt ceiling. Democrats are deciding how to lift or suspend the limit on their own after Republicans said they would not join the effort. Now, okay, this is one of the reasons, just one of a number of reasons why I think there's a potential in October for a stock market to roll over, And the debt ceiling is one of those potentials that I see in October. If we don't get a market crash in October, if the market rides through smoothly into November, then they're planning, the Federal Reserve is planning on starting to cut back on their bond purchases, on their quantitative easing through a taper program, and it's a very aggressive taper program. I guess it extends through to July of next year, and where they'll be back down to zero. That's the only thing supporting the markets is cheap, easy money. It's starting to cut things back. So, if we don't get a market crash, I don't see how we're going to make it through a taper with a market crash. But if we don't get a market crash, but next March, the inflation is going to become so embedded in the system that it's game over, basically, by next March. If we don't get some sort of a deflationary episode. But if we do get a deflationary episode, it could start to extend out into all of these financial asset bubbles, start to burst them. Where are we going with that? Is they're going to have to support these asset bubbles, because these bubbles are potentially so large that they could completely bring down the entire system. And in supporting these asset bubbles, of course, they're going to shift us in the opposite direction. Now, we were talking here about Evergrande in China there last week, and I was saying how it could be China's Lehman moment. Well, Beijing, I guess, is going to somehow, I think Beijing is going to start to smooth this over, but still it's causing crisis and social unrest in China right now. We got all kinds of people standing out in front. I think they had a picture here of all kinds of people standing out in front of the company, and it says Bloomberg reports this morning it's now manifesting itself, mounting protests by home buyers, retail investors, and even its own employees. They're protesting the company that they want their money. Now, I'll tell you what, Evergreen, and one of the things in China, there's a huge shadow banking system in China. And what they do is they sell these what's called financial products, and they pay higher than normal interest rates. Of course, they're very popular in China because it looks like you're buying it from a very legitimate bank and whatever, you know. So they buy these financial products. Financial products industry in China is huge. And it's sort of almost like a Ponzi scheme. But, you know, the whole world now is all Ponzi schemes, basically. It's just like it's everywhere in the financial system. The expansion of credit's gone off of the charts. Let's get in and take a look at silver right now. Silver is 23.77, and we're seeing it go up today. It's up 9 cents so far, but it still hasn't reached that $24 mark where it was above the $24 mark. That's 23.77. So overall, it's down, even though it's going up a little bit right now. Let's take a look at gold. Gold today, we're looking at $17.95. It's up $8.50. Gold and silver, you know, they just can't get off the launch pad. And there's a reason for that. It's the paper derivatives products. And gold and silver have now become a derivatives market. They don't deal in the real physical metal any longer. They couldn't care less what the physical metal's doing. They're trading paper. But, you know, all of a sudden they could care if they actually run out of physical silver. And it is a real possibility, because what would make them run out of physical silver? If investment demand goes up a lot higher than it is right now. If suddenly something happens within the financial system, some sort of a little that makes people run to gold and silver, they don't have enough silver, physical silver, for a big upshoot in investment demand right now. I just know they don't. So if anything happens where people start to run to gold and silver as a safe haven, any sort of financial storm in the next few months coming along, they're going to run out of silver. They can't handle an upsurge right now. They're just barely keeping their heads above water to supply all these retail silver companies and stuff. And so we're in that very vulnerable position for them to try to maintain supply. As long as things are going along fairly decently, you know, and they can get along right now, you know, they can just pump enough to keep Atmex and Kitco and all these companies supplied. They're just doing it barely. As long as things stay smooth. Okay, let's take a look at cryptos today. And in the land of cryptos today, what happened was there was an announcement about Walmart doing some sort of a deal with the Litecoin Foundation. And right now, there's question marks about that. And Litecoin price shot up like a rocket. Oh my goodness, it was like a rocket ship to Mars. I went on there this morning. I think it was like 225 or something. Now it's dropped back to 179. I guess there's question marks as to whether this is all legit about Walmart deal. Some sort of Walmart deal with Litecoin. I guess there's big question marks right now as to whether it's legit. If it is legit, you're going to see the price bounce up. If it's not legit, we're going to see the price go back down to its average mean. It looks like it's going back down to its average mean right now, which is $178 for Litecoin. But it was quite an incredible bounce it had this morning. Now, the overall industry right now is at 1989 billion, so it's down because it was like 21. I think it made it almost all the way up to 22. Now it's down to 1989, so Bitcoin is down right now. And something that I notice is the Bitcoin price itself is holding relatively stable compared to the amount of the size of the drop in the industry. That means money's coming out of the altcoins. That's a bearish signal in the crypto industry when that happens. Money comes out of the altcoins and Bitcoin stays more stable than the others. That's a bearish indicator. Now let's take a look at the Dow Jones today and see what it's doing. 34,929. We're up 321 points on the day. I think if we do get some sort of a crash in October, that after they rescue it, we're going to be off to the races with this. And there's no limit to how high the stock market can go and the markets can go when we start to enter into a hyperinflationary scenario. Some of the best performing stock markets in the world have been in hyperinflating countries with hyperinflating currencies. But, it doesn't mean you're making money on those stock markets. That's the thing, right? Okay, let's take a look at crude oil today. $70.93. It's up 91 cents on the day so far. So we've cracked the $70 mark on crude. Let's take a look now at the MOVE index. And the MOVE index is staying low at 5173, meaning that there's a fair amount of stability in the credit markets right now. That stability could disappear in a heartbeat. Let's take a look now at the bonds and rates, and we're looking at falling yields today. There's a number of markets, they can't let move. They can't let these go up. And the bonds themselves are kind of indicating that right now that the inflation is starting to stem off. The inflation is starting to slow down. It's decelerating, and that's called disinflation. So right now, even though we've got higher than inflation numbers than we've seen going all the way back to the 1980s, the brakes are coming on really quick. That's called disinflation. And these bond yields is one of the things out there that they cannot let these bond yields rise. They will control them at all costs because it would break the system apart. So we're seeing the bond yields being kept low, just like we're seeing the gold. The gold and silver is another thing. They can't let them go too high either, or it would crack up the system. But they might not. They might lose control over gold and silver at a certain point. Waiting for that day when they lose control over those markets, the gold and silver market. Boy, they've had control over that using those paper derivatives products. So we're looking at a 10-year today at 1.31. It's down 2.2 basis points. And a 30-year at 1.9. And it's up 3 basis points today. Down 3 basis points today. So that's some pretty good movement in the bond yields to the downside. Let's take a look at the U.S. dollar index right now, and it's at 92.65, and it's starting to go down. It was up earlier today. But, an awful lot of people, they put a very much emphasis into this U.S. dollar index. And I'm going to tell you guys, it's only being compared against a bunch of other crappy currencies. I think the dollar index should be the dollar compared against Bitcoin. Talk about a crashing dollar then. The dollar's been crashing against Bitcoin ever since Bitcoin was started back in 2009. They were like a nickel a piece. Oh my goodness, wouldn't that be tasty if you could still buy Bitcoins for a nickel? Anyway, so thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.